Well, thank you so much for joining us here. I'm Marlon Bowling with you here on a Tuesday as we watch your ag commodity trade. Kind of eventful today. What do you think about that grain trade so far? I know Mark Oppel's been talking about the rally we've been seeing, especially in the wheat trade today. A lot of reaction to the latest crop progress and condition reports that came out yesterday. USDA released those reports at 3 p.m. Central Time yesterday. And here to help talk about the market reaction ever since then, let's go to the Skype feed that we have here with Brian Hoops. He happens to be with Midwest Market Solutions, and there he is right now. Thanks for joining us here, Brian. How are things going there in Missouri?
Great. It's going great. We got some exciting markets. Finally, we get to see some uptrending markets, and we're very thankful to see that. It's been a long time coming for most of our producers.
All right, let's take a look at what the trade is doing right now. Let's go through these. We'll start with corn, go to soybeans, then end up on the wheat here for the time being. On the corn market right now, on the big board in Chicago, we do have that July contract trading at $3.78 1/4. It's still 5 1/4 cents higher. We are about a penny and a half now off of our high, but off of our low from overnight by 7 cents. December corn now 4 3/4 higher at $3.96 3/4. If you look at the soybean trade today, we have that July contract 8 higher at $9.30. That's a full dime now off our overnight low. And November soybeans currently 9.34 and a half now. That would be 6 1/2 cents higher than our close yesterday. So let's take a look at that wheat trade now. We were just talking about the big springboard action there, led by the spring wheat. July Chicago wheat now 9 1/2 higher at $4.39. That's up within a couple of pennies of its high of the day and about a dime off our low. Let's take a look at Kansas City wheat. There we have July now trading 10 1/2 higher at $4.40 1/2 per bushel. That's exactly a dime off of its daily low this morning. And then bringing that spring wheat into the equation here in Minneapolis, we have July now 11 3/4 higher. And yes, we are still above $6 at $6 3/4 cents. Had a high earlier today of 6.04 a short time ago. Brian, I look back and this is the highest we've been in that Minneapolis spring wheat since, I believe, June of last year, I believe.
Yeah, that's exactly right. We are seeing some strong gains there, and that's where really the fundamentals are most supportive is in that spring wheat belt. We are looking at much higher prices, I think, to come. The dry weather is still intact over that parts of North Dakota where drought is expanding and all across the spring wheat belt. Now, we look at the corn market. It's having a breakout on the charts, an outside day higher, but a lot of it is coming because of spillover strength from the wheat market as December has an outside day higher. This is the highest December corn is traded since March the 7th, and there is rain in the forecast for next week. And that could pull us back off of these highs, but right now we're seeing some pretty active fund short covering as the fund managers are really getting to the point where maybe becoming a little frustrated as corn's not making new lows and not falling. They're holding some big short positions, and they may start to cover some of them short positions back.
You know, Brian, I actually write some ag weather bullet points for some organizations, and we were talking a little bit ago about the fact that in the medium range forecast, you go out about 10 days or so, and there's supposed to be a round of showers that kind of hugs the Canadian border, moving from the Pacific Northwest over toward the Great Lakes. However, it sounds like through the southern and central plains, through the Corn Belt, it's going to be hot.
It's going to be real hot over the next week or so, and then there's a chance to get some rain, and that's going to be real important because the forecast in the longer term, the 11 to 15 day, is talking about hotter weather again. So this is the time of year where temperatures heat up. This is the time where we can see big swings in the market, and we can add a lot of premium real quickly into prices. And I think that's our best chance to have a rally between now and that 4th of July timeframe when corn starts to pollinate is drier and hotter weather. That could get the funds out of these short positions, and their short covering will give us a rally in the markets.
Okay, Brian, we'll bring you back here in a little bit and talk more about some of the other markets. We'll include the cotton as well when we come back after a break. We're talking with Brian Hoops. We'll be right back. Thanks for joining us here on the Market Day Report. I'm Marlon Bowling with you. Well, to continue our conversation with Brian Hoops, he is the president of Midwest Market Solutions. Let's start by taking a look here, Brian, at our cotton market. And I wanted to get your real quick thoughts on that. On the cotton, we are down 29 points on July, but we have December 13 higher now at 72.74. Any thoughts on what's going on with the spread there or not?
Well, you look at that structure of the market, it's still premium structure, meaning that the demand is in the front months. There's little concerns about the crop yet, even though some rains have stabilized things. It still looks like there's a pretty strong, aggressive buying in the front months for the cotton, and that's usually a sign of a pretty strong market.
Okay, now I want to move on to the livestock trade as well, and let's look at live cattle first. Right now we have the June up at $1.55. Remember, that's in delivery now. August, though, 92 higher at 127.12. That's close to the high of the day, within 30 cents. We have on the feeder cattle side, let's switch over there. We have the August contract, 33 higher now at 160.20. That's bounced back $1.40 now off our earlier low today, so a bit of a rebound here. We have September up 15 at 159.50. Lean hog trade, let's take a look at that. We have June up $1.38. What a rebound. July now up 126 today at 81.68. Your thoughts on what you're seeing here across the livestock sector?
Well, we just talked about the cotton market having a premium structure where the front months are higher than all the deferreds. All the cattle and hog contracts you just showed all have that same structure where the front months are holding a big premium over the deferred contracts. That's a sign of a very strong demand type led market. That's not a bearish market. It's a bullish market. And we see that structure in, as I said, cattle and in the hog markets. And I think with the higher cutout values, cash is looking better. We're already hearing bids at 216 in Nebraska, and that would be steady with last week's trade.
All right, so as we move forward here, what do you expect to happen here with this hog trade the way it is? It's been testing recent highs. Is it going to bust through, make another leg higher, in your opinion, or not?
Yeah, I think so. Last summer we made highs up around that $90 mark. We have demand even better than a year ago. Weights have come down from a year ago. So the structure of the market is there to go challenge those highs. I would, certainly think we could get to the mid 80s again, challenge the contract highs. If we can get above it, lots of stops sitting above that area. Thanks,
Brian. Good to visit with you. Brian Hoops, he's the president of Midwest Market Solutions. He is based in Springfield, Missouri. And Christina, you and I were talking about it yesterday. That hog market, the way it was setting up, is it going to be picking off the stops below the market? Is that what it's up to? Today, it appears that's what happened, maybe.
Maybe. We'll have to find out, but you definitely saw that one coming. All right, thank you so much, Markets Editor Marlon Bowling.